Hello and welcome to the latest MEED webinar. My name is Edward James. I'm the head of content and research at MEED Global Data in the Middle East. And I'll be giving you today a presentation on the GCC Projects Market this year, taking a look at all the sectors and markets and different dynamics impacting the industry today. Now, this presentation will be about half an hour long. It'll be followed by question and answer session. And as ever, if you do have any questions throughout the course of this presentation or about the market in general, then please use the Q&A box on your Zoom menu to enter your questions, and I'll attempt to answer them at the end of this presentation. Now, also, as ever, this presentation is being recorded and you'll have the ability to watch it later once we've uploaded it online onto YouTube. And you will be able to share that, of course, with any colleagues or friends that might be interested. And if you've registered for this webinar with your email address, you will also receive a PDF copy of this presentation at some point over the next hour again, so you'll be able to look at it in your own time. Because there is a lot of data in this, you may not be able to all note everything down as I speak live, so you'll have that extra opportunity to look at it in your own time. Okay, so let's go. Now, first of all, just for you, those of you who may not be aware, what is MEED? MEED is a platform, a business intelligence platform and service provider looking at all aspects of the macroeconomic, political environment and projects market in the wider MENA region. We have MEED.com, our news, features and analysis website with daily news updates, with an editorial team producing exclusive news and information on a daily basis. We also have MEED Projects, our projects tracking service, tracking all major projects above $10 million in the MENA region. And it's indeed from MEED Projects that we can quantify what's happening in the market, both past, current, and future. And with that data, build bottom-up analysis and graphs and data points that you'll see later in this presentation today. In fact, almost all of the data that you'll see in this presentation is sourced from MEED Projects. We also have our premium reports business, our PIR reports, premium intelligence reports, which you can purchase. We have our events, which I'll talk about in a second. And we also have marketing solutions for things like white papers, roundtables, events, and any other bespoke content marketing solutions that companies might need. And I mentioned I would talk about events, and here is our Blue Ribbon event coming up very shortly in Riyadh. It's our Saudi Giga Projects 2025 Summit. It is the premium and best event summit on the Giga Projects market in Saudi Arabia. This is our second edition looking at the Giga Projects. We had last year most of the major Giga project clients in attendance, giving presentations on their projects, doing roundtables, being interviewed, and so on. And this year will be even bigger and better. It's in Riyadh between the 12th and 14th of May. It's a 3-day event, and it will feature a number of workshops, as well as, of course, the conference summit program with presentations, interviews, fireside chats, and, of course, panels. You can see a list of our partners below. And if you are interested in attending, please scan this QR code here in front of you. And it's also worth mentioning that we have a special Ramadan offer with 15% off delegate passes. So if you are all interested in the Saudi Giga Projects market, as well as the wider projects market in Saudi Arabia, then this is an event that cannot be missed. And I'll be hopefully looking forward to seeing you all there in the middle of May. And finally, also, I just want to point out to you that this webinar today on the GCC Projects Market is essentially a snapshot or summary of our much larger GCC Projects Market and Future Outlook 2025 report, which is now out in the market. It is an extensive, several hundred-page report looking at all aspects of the GCC Projects Market, very much data-focused And if you are at all interested in the GCC projects market across all sectors and countries, and then this is something very much worth checking out. And as ever, for attendees today, there is a special discount. You can see the code up there, webinar 600, and that is available for you all until the 3rd of April. If you want to know more, please scan the QR code there in front of you. Okay, let's crack on with the presentation itself. Just a note to remind you all that this is being recorded, and you'll be able to, again, watch this in your own time once it's been uploaded, and a copy of this presentation will be emailed to you over the next hour or so. All right, let's look at the very basics of the GCC projects market, just for summarizing for those of you who may not be familiar with it. So currently, the GCC projects market is in the middle of a boom, the data for which I'll prove to you shortly. It is one of the largest projects markets globally, certainly one of the most dynamic, and in terms of the size of the projects, as well as how iconic they are, then it is certainly one of the most exciting as well. Over the last decade, we've seen more than $1.4 trillion worth of project contracts awarded in the region, with Saudi Arabia, the UAE, and Qatar being the 3 largest markets. Construction generally is the largest single sector. That's hospitals, villas, hotels, malls, and towers, etc. Followed by the transportation market, like roads, airports, metros, and then, of course, pivotally, the oil and gas market, upstream and downstream and midstream as well. I'll talk about the drivers of the projects market in the next slide, but there are a number of key considerations there to take into account. The fast, rapid population growth necessitates the need for investment in both infrastructure and housing. And of course, the Middle East is one of the world's prime producers of and supply centers for oil and gas, and that is also a very key area for investment. Generally, the projects market in the region is dominated by state spending from government budgets. This is changing somewhat, albeit fairly slowly in the region, and we'll talk about that as well later on in this presentation. But generally speaking, the governments are financing most of the projects from their budgets, which means there is a lot of dependence on the oil and gas price for their revenues. Again, this is changing as the economies diversify. And in some places, like in Dubai, there's much more private sector participation. But generally speaking, we're looking at a market where the state is the client in one way or the other for many projects. It's an open market. We're not looking at just local suppliers or regional contractors. Many international players are active in the market, many international suppliers as well. And there generally isn't a bias towards local firms and local contractors, as is demonstrated by the wide diversity of players in the market. There is a lot more investment in the region now in terms of equipment, supply, material, production, supply, but there is still a large number of international players active. Now, the other thing to bear in mind, that labor is very cheap in the region. There's a lot of imported low-cost labor from South Asia, for example, and that in itself, as well as being a characteristic of the market, also ensures that there are certain dynamics in the region that might not be necessarily as prevalent in other parts of the world. The low cost of manpower means that there is a lot of projects driven by this manpower availability, which in turn sometimes acts as an impediment to efficiency. There are procurement laws, and as we know, as I said, the market is dominated by public sector spending, and public sector spending on projects falls under procurement laws, which have pretty rigid criteria for awarding contracts, as well as how projects are tendered and the contractual framework as well. And any company wishing to bid for public sector contracts needs to adhere to these procurement systems and laws. And I think finally, the important thing to bear in mind is that there is comparatively little transparency in project tendering, project planning, and project pipelines. Yes, in Oman, Bahrain, and Kuwait, you do have tender boards. But in other markets, whether it's private sector or public sector, there is very little public information about tenders, future projects, and so on. Let's take the oil and gas sector as a good case in point. ADNOC and Aramco, for example, do not publish data or publish tenders on their projects, and therefore it can be quite difficult to understand what is happening. What are the key drivers of the projects market? I mentioned some of them, but it's certainly in the construction infrastructure space, very high population growth necessitates the need to develop new construction projects in the form of residential towers, villas, and various infrastructure works to support them. Of course, as the population grows, you also need to invest in transportation and networks and capacity, as well, of course, power and water capacity to support this rapid growth. We also have some emerging sectors which are driving the market these days. Data centers is one of them. You may have seen we did a webinar a month or two back on the data centers market. It's a fast-growing sector. Hydrogen, of course, green hydrogen, blue hydrogen is a sector that's also fast-growing and is expected to emerge very rapidly over the next couple of years. High-speed rail is another emerging sector. There was no high-speed rail in the GCC, but that is changing with the Abu Dhabi to Dubai high-speed rail network now emerging. I just made a mistake there. There is actually a high-speed rail, the Haramain high-speed rail between Medina and Jeddah, but this is now being joined by high-speed network in the UAE. High oil prices. We've seen over the last 2 or 3 years a return to higher oil prices after the COVID slump and the 2015 to 2020 slump. Oil prices sitting between $70 and $80 a barrel these days, and that supports government revenues, which in turn support greater spending by the governments on projects. You also have the long-term visions by each country, like the Saudi 2030 vision and others, which create the framework for capital expenditure and growth in the region. We also have now net zero targets for most GCC states, and this is driving development of renewable energy sector, low carbon buildings, for example, and general sustainability measures in the projects market as a whole. And this is creating a whole new market dynamic and sector. As I'll touch on later, we've also got major growth in the PPP model. And as government expenditure is stretched as a result of increasing number of projects and expenditure, then the PPP model is becoming more attractive. So where are we today, just in terms of quantifying the size of the projects market? Well, as you can see, in the last 2 years, we've entered an unprecedented boom in the projects market in the GCC. Contract awards hit a record $252 billion of contracts awarded in 2023, after an average of about $110 billion a year between 2016 and 2022, and far higher than the previous record of $173 billion recorded in 2015. Now, that 2023 number was surpassed last year with an incredible $287 billion worth of contracts awarded. And this really is the result of a number of converging policies and developments that have spurred on that market, but namely a big increase in oil and gas spending, but also elements such as the Saudi Giga projects program, the Dubai real estate boom, and indeed transport infrastructure boom as well. And together, all of these are converging and propelling the market forward. So the question over the next few years will be: will this boom continue? Or are the last 2 years outliers, and the market will reduce back to the norm going forward? So in terms of that data by country, we can see that there are 2 main markets driving that. They are, of course, Saudi Arabia, which recorded $148 billion of contracts last year. This is the highest number ever recorded by a single country in the GCC, and indeed one of the largest markets globally. Next up, we have UAE, which was fairly flat year on year, about $92.6 billion of work awarded, just under its own record the previous year of $93.6 billion of contracts. Now, that is driven by both the Dubai real estate market, but also increased spending by ADNOC in Abu Dhabi. The other four markets in the GCC are much smaller, and the hope is as well that they will be able to grow over the coming years. They historically have been a bit smaller, but in the cases of markets like Kuwait and Qatar, I think it's fair to say they could perform a lot better. And all eyes will be on them to see whether there can be a resurgence in those markets too. Nonetheless, as you can see, it's dominated by both Saudi Arabia and the UAE. Again, taking that same data and looking at it by sector, we can see that, as usual, the construction market is the largest single market segment, as it has been over the last few years. Last year, it recorded nearly $90 billion of contracts awarded in the region, just up a little on the previous year. And the second largest sector, pretty much for the first time, is the power market. A lot of that has been driven by investments in renewables as the GCC states look to become net zero by 2050, 2060. But there's a lot of investment also in transmission and distribution networks too. Oil and gas tends to be more cyclical with up and down, peaks and troughs. The projects in the oil and gas sector tend to be smaller, tend to be larger, but smaller in number. And that's why you get big ups and downs without any specific trends. We've also seen a big increase and record level expenditure in the transport infrastructure market, lots of investment in metros, airports and roads. And then also we've seen a big jump over the last 2 years in water investment. Water investment is at record levels right now, particularly in water distribution and treatment. Right, who are the top clients and contractors in the region in terms of work currently underway? On the client perspective, we can see that Aramco, as you might expect, is the single largest client in terms of work underway right now in both greenfield and brownfield expenditure. It's followed by Qatar Energy, LNG, of course, with its two massive LNG expansion programs underway. We then have NEOM, which is the world's largest project and Saudi Arabia's largest Giga project, of course, most well known for the line component. And again, we'll have a look at that later. We then have Saudi Electricity Company, a huge investment both in new power generation capacity and transmission and distribution systems, followed by the SPPC, which is the tenderer of PPP, power generation projects. ADNOC next, and then one of its operating companies, ADNOC Gas Processing. And then you can see also various other government entities going down the list. And you'll notice that almost all of these are either government-owned or government-related entities. In terms of the top GCC contractors, well, when we take into account all sectors, including oil and gas, then we can see that it's dominated by international EPC firms like Saipem. Saipem operates across a number of sectors, but is both onshore and offshore, but as you can see, is a clear leader in the value of work underway these days. It's followed by Larsen & Toubro, which, like Saipem, can also operate across different sectors. So, for example, it builds renewables projects, it builds roads, it builds transmission and distribution. It's also active in oil and gas. Tecnimont, also from Italy, is another big player, especially in petrochemicals, as well as, of course, Technip, and then Spain's Técnicas Unidas, TR. So you can see, going back to my previous reference to the market being open to international companies, this is a great case in point where you have these big international contractors very active in the market. Now, just thought I'd narrow down into the UAE and take a look at the Dubai and Abu Dhabi market performance over recent years. And you can see that In 2023, due to ADNOC's record spending, Abu Dhabi hit $45 billion worth of contracts awarded, followed by Dubai, about $35 billion. Of course, Dubai, much more infrastructure and real estate dominated. And then this year, in 2024, those positions was reversed, with Dubai hitting an all-time high of $43 billion worth of contracts awarded, and Abu Dhabi slipping back, but still far higher than previous years at about $36 billion. Another case to look at is the Northern Emirates. We've seen a steady growth in the Northern Emirates markets over the last couple of years, of course, driven by real estate investments in Ras Al Khaimah, particularly around Marjan Island, and the Wynn gaming resort. So that's also a growing market these days. Taking a look at Dubai, one of the largest single markets over the last 2 years, $43 billion worth of contracts awarded in the Emirate alone last year. And you can see how that's just been driven by residential project activity. Here on the left, we have the number of projects awarded in given years. Of course, we saw a slump in 2020 due to COVID, but we've seen a very sharp acceleration between 2022 and 2024. So you can see just how dependent the Dubai projects market and the regional projects market is on the real estate market in Dubai. And again, and that's another way of looking at it, is by the number of residential project launches over the last decade or so. You can see we reached a record number last year as developers seek to take advantage of the real estate boom. Okay, just sticking to that Dubai market overview, let's have our first poll question of the day, and that is, what is your opinion of the Dubai projects market over the next 12 months? Will it continue to grow? Will it continue at the same level, or will it start to fall? And of course, this is all basically based on your opinion about the Dubai real estate market. So let's see what you say. So we have more than 500 live attendees today, so we should get a very good poll result here, very good sample size. Okay, and with about 300 responses, we have a half of you saying it will continue to grow. Very positive, optimistic outlook there. We have a third of you saying it will continue at the same level. And then we have 15% of you saying you believe it will start to fall. So a very bullish outlook for the Dubai projects market, and by extension, the real estate sector here. Just a reminder, please, that to submit any questions you might have in the Q&A box, and I will attempt to answer those later once this presentation is finished. Just another quick plug to the MEED WhatsApp channel. We have a channel which you can receive the latest news and analysis on. Simply scan the code and you will get discrete updates onto the channel on your WhatsApp, on your phone. I believe it's normally about once a day you will receive some updates and news. Please join to get the latest update information. It's free, and it's a very valuable way of being able to keep up to date with the latest developments in the market. So now I'll look at some 4 or 5 different key trends facing the market today, which are having an impact and which are worth noting. So, and these are no particular order, but I wanted to touch on the growth in the Chinese contractor market in influence in the GCC. So over the last 2 years, we've seen dozens of new Chinese contractors come into the region, and across all sectors have won a very large chunk of work. Indeed, of all the work awarded in 2024, Chinese contractors won about 20%, or close to $50 billion. And you can see how they moved from about $8–9 billion worth of work awarded in 2023 to more than $30 billion in 2023, and then on to $47.6 billion last year. Now, there's no necessarily one dominant Chinese contractor, but because there are so many active Chinese contractors in the market, there's a lot of work spread across them all. And whether it's in Dubai real estate or in the power sector in Saudi Arabia or in oil and gas in Kuwait, Chinese contractors are really beginning to dominate the market. Why that is? Well, apart from the fact there are many more entering the market all the time, and as a result, there are many Chinese contractors for that to be distributed across. Chinese contractors are increasingly very capable, have a lot more reference points, are being pre-qualified on more projects than ever, and therefore being more successful than ever. They also, in some instances, are able to bring financing with them. And as part of the Belt and Road Initiative, they're also coming in on the coattails of major Chinese investment into the region as well. So I expect that this Chinese dominance will continue. We're seeing it continue into this year as well. And that is, of course, a welcome relief to the clients in the region, which are hampered by a lack of contractor capacity. So it's really becoming a very Chinese-dominated market right now, as indeed we saw 10, 15 years ago with the Korean contractors, and indeed before that by Japanese contractors. So right now it's the age of Chinese contractors in the market. Another key trend that we're seeing these days is the growth in the PPP contractual framework. As I mentioned a while back in this presentation, there has been a big movement towards more and more PPP contracts being awarded. You can see here that as a percentage of total projects in 2023, 23.5% of total contract awards in Saudi Arabia were in the PPP, using the PPP framework. Last year, that fell a little bit to 20%, but still far higher than previous years. Why that is? Well, in addition to increased spending in the power and water sector, which traditionally use PPP models, we're also seeing for the first time, the use of PPP models in new sectors such as schools and education projects. And indeed, if you look at the NCP in Saudi Arabia, the body responsible for tendering and overseeing the PPP market there, they have a pipeline of more than 200 PPP projects across very diverse markets, from things like healthcare clinics to radio and TV towers to hospital housing and so on. And as the government finances get stretched, increasingly PPP models are seen as an attractive means of developing projects off balance sheet without necessarily resorting to direct government expenditure. And as a result, I expect to see this PPP model used much more extensively in the region as well as the kingdom going forward. Of course, no presentation on the GCC projects market these days can happen without touching on the Giga projects market in Saudi Arabia. We do have separate Giga project webinars. You can find them online and on YouTube for a more extensive overview of what's happening on the Giga projects market. But here's a very quick overall overview of the Giga projects market in Saudi Arabia, some of the key players in the market. So far to date, there's been about $104 billion worth of Giga project contracts awarded, with another 800 billion to a trillion dollars worth of Giga projects still to come. So it's very much still at the early stages. But these are clearly a major driver for project development and overall project spending in the kingdom. But, and a big but, we have seen a slowdown in Giga project expenditure over the last 5 or 6 years. Over the last 12 months, apologies. We've seen a rapid growth in the Giga project spending, reaching a peak of $33 billion in 2023. But then we know that last year there was a pause in spending. We saw a lot of headlines around rescoping and rephasing of the line in NEOM, and a general slowdown overall as the government in Saudi Arabia started to reprioritize its spending plan, especially in light of the World Cup in 2034, the 2030 World Expo, and of course the Winter Games in Trojena in 2029. So last year we actually saw a fall in Giga project spending to about $25 billion. And of course, for everyone involved in Giga projects, which is most companies these days, that is something of concern. So the question is, Will 2025 be better? Will it see a resumption in project activity in the Giga projects? We're certainly seeing some increased spending in Doria and potentially in Qiddiya this year, but in the other Giga projects, it doesn't look as if there's going to be a substantial increase in spending. Another key factor, which everyone is talking about these days, is the Trump administration and its potential impact on the economy and the projects market by extension in the GCC. I think in terms of both tariffs and in their energy policies, these could have the biggest impact on the overall economy. Of course, spending on projects or the projects market in the GCC as a whole is dependent largely on the oil price. And we know that Trump and the administration there is very keen on lowering oil prices, and there are a number of factors that it can influence that could potentially put downward pressure. Either one of them is, of course, on the Ukraine-Russian conflict, maybe potentially an ending of that and resumption of oil and gas exports from Russia, which would increase a large amount of supply globally. So that could certainly be a big factor on the oil price. And likewise, Trump's drill baby drill policy about increasing oil and gas output in North America, and therefore it's the extra supply also impacting the market as well. So there's not just in terms of tariffs and the wider economic impact of those, but also on the oil and gas market, which is, of course, critical to the performance of the projects market as a whole in the region. Another key trend, one we did a webinar on and a report on fairly recently, is the data centers market. We talked about a number of sectors emerging, such as green hydrogen. Well, data centers is certainly a market that is growing very rapidly, all to do with data sovereignty and investments by the big players like Amazon Web Services and Google and Microsoft into the region. So a big increase in data center projects and investment. And certainly, when I'm talking to the market and key contractors, investors, the data center market is certainly something which is right at the center stage of debate. And then also, I think we should also touch on another key trend, which is technological innovation. There is a big push these days hand in hand with sustainability with the use of technology. Now, I think it's fair to say that the construction sector worldwide is one of the last adopters of technology, tends to be quite resistant to the use of technology for various different reasons, which I won't go into here. But there is an increasing push to contractors and suppliers and clients in adopting new ways of working. One case in point is, of course, 3D printing. There was an initiative or an announcement by Dubai, for example, that it wanted to have a third of all buildings to be built using 3D printing by 2025. Now, clearly, that's not going to happen. And indeed, 3D printing has fallen back a bit because I think in practice, it is not a real efficient way to build buildings at this moment in time, although as the technology improves, that may well change. One technology, though, that is being embraced full-heartedly, particularly on the Giga projects in Saudi Arabia, is modular construction or off-site construction. It's now seen as a means of more quickly and more cheaply building large-scale similar specification projects, for example, like labor housing or staff housing and so on. And of course, it also comes with the fact that it has a lower environmental impact with less labor on site. And this is certainly something that is becoming much more popular amongst clients and contractors. Now, building information modeling, BIM, is not such a new technology. It's been used especially in Dubai over the last 10 years since it was mandated, as well as in Abu Dhabi. But it's now being rolled out as mandatory amongst public sector clients in Saudi Arabia. And for smaller companies, they now need to take this issue very seriously and will need to adopt BIM as standard across their designs and in their project implementations. Clients are increasingly insisting on it, and the benefits of it are becoming increasingly more apparent over time. Of course, AI, everyone's talking about AI these days, and it's true in terms of AI, whether it's in terms of BIM integration or BIM tools, or whether it's in terms of delivery tools and design processes. AI has a huge potential, and that potential is becoming more obvious each day. One of those ways, I think, in particular, is in a digital twin technology and sensoring, particularly post asset completion, and how clients can integrate the post asset completion operations into the design and construction process to make buildings much more efficient and more sustainable. And I expect to see hear a lot more about that over the years to come. And of course, there are many other technologies, LiDAR, drone technology, robotics, and so on, which are making projects more efficient and sustainable as well. And of course, in some technologies like robotics, in theory, they can add incredible efficiency. In practice, however, there were still some teething problems with making them work on the ground. And really, with technology, it's something that all stakeholders have to adopt and implement. It needs to come from the top by regulations and mandates, but it also needs to come from the bottom with companies embracing that technology too. And a wholesale mindset change is happening as clients, stakeholders, and contractors and suppliers are gradually becoming more aware of the benefits of technology in terms of the delivery of their projects. Now, a question related to that: which construction technology will have the biggest impact over the next 5 years, in your opinion? 3D printing, modular construction, 4D to 7D BIM. That's more advanced BIMs, taking into account sustainability, efficiencies, and operational aspects. Digital twins and predictive maintenance, robotics, drones, or other. Let's see. Just a reminder, while you're doing this, we are recording this presentation. It will be uploaded to YouTube over the next couple of days, and you will be receiving a copy of this presentation in your email as long as you've registered for this webinar. And then, of course, finally, after this presentation, I'll be taking your questions. So please submit your questions in the Q&A box. I see we have already 25 questions. Okay, now we've got 270 responses, and the winner is modular construction. 43% of you say that this will have the biggest impact on the projects market going forward. Then 16% of you say digital twins, predictive maintenance. 14% of you say 4 to 7D BIM. 13% say robotics. 6% 3D printing, and drones at just 5%. And if I just scroll down, what's other? Other at 2%. Okay, so clear winner there in terms of modular construction. Interesting. Right, 2025 and beyond. Okay, another poll question before I go into the future outlook for the projects market. Do you believe the GCC projects market this year will be 1, better than 2023-24, about the same as 2023-24, or worse than 2023-24? Let's have a look what your instincts are telling you, what you've seen and what you've heard. Seems to be fairly even between the 3 questions so far. This is a great barometer with 300 of you. It's a great barometer of the market. It's a great market sample and a great barometer of what you believe will be happening. Okay, so about 45% of you say the market will be the same as 2023-24. Just a reminder, 2023 and 24 were record years for the projects market. So 45% of you are saying the boom is going to continue. 33% of you, a third, say it's going to be better than the last 2 years. That's very, very optimistic, a very bullish perspective on the market, and a very good sign. And then 22% of you, about a fifth, say it's going to be worse than the previous 2 years. So that is very interesting indeed, but a good even spread about how you view the market and its outlook. So let's see how we're doing this year to date. So, as of yesterday, there have been about $45 billion worth of contracts awarded in the GCC, which pro rata would make it about $200 billion of work for the year as a whole, which is a little under last year's numbers. It itself would still be a massive jump on the previous decade. But just based on the performance of the market so far this year, we're slightly under trending for the year as a whole if it's going to match the last 2 years' numbers. That said, the market does tend to be quite backloaded towards the end of the year. And as you may have seen from the earlier slides, that those numbers do rise, continue to rise in the following year as more and more contracts become known and are added to the previous year. Nonetheless, still very healthy performance this year. You get to see some of these big contracts. And as you'll notice, that most of them are in the power, industrial, petrochemicals, and oil and gas space, as you might expect, because they tend to be a lot bigger. That there's still a number of big construction infrastructure contracts as well there. So a lot of activity, several multi-billion-dollar contracts being awarded. So still a pretty healthy market. Now, in terms of the market outlook for the year as a whole, let's take projects in tender or bid evaluation, because these are the contracts most likely to be awarded over the coming months. And we see there's about $235 billion worth of contracts out in the market today, either in bid or evaluation, so it could be awarded at any moment. And in keeping with the trend of this webinar, you can see Saudi Arabia is the largest element of that, followed by the UAE, and then the other 4 GCC states. And then in terms of the breakdown, very similar to the breakdown or proportions for sector spending. Construction, once again, the largest element of that, followed by transport and infrastructure, $65 billion, then power, and so on. So very healthy prognosis for the market as a whole this year. Certainly, even if it doesn't quite hit the heights of last couple of years, it's still going to perform at a very high level. And a similar bullish outlook for the long-term outlook for the market in terms of the long-term future pipeline. We have about $1.5 trillion worth of known future projects in the market, led by Saudi Arabia, which is larger than all the other 5 GCC states combined, about $1.5 trillion. I guess that's a kind of natural consequence of the kingdom having the largest population, the largest economy, and the largest geography. So it does make sense. But nonetheless, these other markets are still massive in comparison, even massive in their own right. UAE, $660 billion is still a huge market as well. And even the other ones, the other 4 GCC states, also similar. In terms of this $2.7 trillion pipeline, you can see the breakdown, again, very similar to the historical breakdown. Construction, by far the largest market, $1.47 trillion worth of work, followed by transport, $415 billion, and then so on. It's worth noting that the oil and gas petrochemicals market tends to be pipeline tends to be underrepresented in this kind of analysis, because we have much lower understanding and idea of what organizations and NOCs like ADNOC, Aramco, and Qatar and Qatar Energy are planning in the long run. So these tend to grow over time. Okay, and then the last slide, looking at challenges and trends going forward, in our opinion. So clearly, huge pipeline, a huge amount of work underway. How is the kingdom going to deliver it? Is there enough labor and engineering capacity? Is there enough materials capacity and equipment to be able to deliver all these projects? Is there enough contractors in the market to be able to deliver it? So we've hit an unprecedented level of projects in terms of value and number, and it'd be interesting to see how the market can perform and deliver these projects. There's already signs from Saudi Arabia that the increasing costs of projects, the cost inflation, is limiting government budgets and the ability to proceed with many projects, the line being a great example. And have we reached a natural peak with the market, with clients unable to simply fund or deliver more than what is already currently there? Likewise, how are projects going to be financed? The oil prices are facing some downward pressures. are the governments being able to find means of being able to finance this huge pipeline, this huge value of work currently underway? Still have a lack of international contractors in the market. We do need more firms from around the world, as well as suppliers, to be able to help deliver these projects. A lot of Western contractors are still very hesitant about coming into the market due to payment issues experienced in the past, high risk, and fairly rigid contractual terms, which are limiting clients' ability to deliver projects. It is a seller's market right now, but unfortunately, still a lack of overall contract capacity to deliver. We have, of course, very fast-track projects. We've got these event-driven projects like the World Cup, like Expo, which are now the priority in Saudi Arabia. But of course, if you look at the other Giga projects, very tight deadlines, very fast pace. This pushes up prices. This creates construction risk, which in turn drives up price escalation. And we've got liquidity constraints. The banking community is at its limits in terms of exposure to contractors and lending towards the construction sector, which means that alternative means have to be found to finance performance bonds, tender bonds, and general contracting requirements. There has been the surety bond development now in Saudi Arabia to help contractors finance performance bonds. Also, now we have the Higher Infrastructure Fund in Saudi Arabia now also guaranteeing 50% of performance bonds to help banks finance contractors. And then finally, big issue is subcontractor availability and quality. A lot of contractors are subcontracting down to the chain to subcontractors, and who in turn subcontract out also. And this has big impacts on quality and delivery, and question marks over the performance of subcontractors generally. We talk a lot about contractor capacity, main contractor capacity, but a lot of the issues around delivery are at that subcontractor and below phase of the projects. So coming to the end of that webinar now, I will start taking your questions. So please add them to the Q&A box. Just a reminder, MEED has a number of different solutions that can help you support your business. There's a quick question now. Just want to ask you which of these are of most interest. If any of them are interest for you, please submit your response, and someone will get in touch with you about those. I can see a lot of interest in the Saudi Giga Projects Summit, as well as in MEED projects and our premium reports. So that's very positive indeed. And in talking of reports, here's a reminder about our premium intelligence report, the GCC Projects Market. Very similar to what I've just delivered, but at a much bigger and more in-depth analysis. If you're interested in that, please scan the QR code to see a sample pages and table of contents, and of course benefit from our discount currently, which you can see in the top left. And then again, a large number of you have indicated that you are interested to know more about our Giga Projects Summit. Here, again, you can find a QR code to learn more about it. Most of the Giga Project clients are going to be there. It's going to be hosted at Roshan, the Roshan venue near the airport. Roshan are going to be our hosts, and of course we'll be giving workshops and presenting and speaking at the event. We also have representatives from NEOM speaking, Red Sea Global, a number of the big Giga projects, for example, from Al Ula, and a large number of the key stakeholders in terms of contracting community, and also government entities like the NCP. So please, if you want to know more about that, scan through this code, and I hope I can see you there in mid-May. Right, let's go on to the Q&A component of this webinar. I have lots of questions, nearly 50. I will try to answer most of them, but apologies in advance if I'm not able to. Is there a slowdown in projects and execution in Saudi Arabia? Well, no, the data shows that actually there was an increase in project awards in 2024 to a new record high. So we've now got 2 years of record-breaking awards in the kingdom. So that would suggest The majority of the work is still to come, and the majority of cash flow is still to come into the market, and therefore we're expecting to reach a peak of construction and demand over the next 18 months or so. What would you say is the norm in terms of projects awards when you say it's going to go back to the norm and that 23 and 24 were outliers? Well, the norm over the previous decade was about $110 billion of contracts awarded each year between, say, 2016 and 2020. That is in line with the fall in oil prices from late 2014 onward. And that was the norm until the last 2 years. So the question is, would we go back to that status quo, or are we in this new paradigm where we're seeing $200 to $250 billion of contracts awarded each year? Why was there a jump in petrochemicals in 2023 and then a resumption to lower levels? This is because there were relatively few big petrochemical complexes awarded, and in 2023 the number was a result of the massive investment in the Al Moral project in Saudi Arabia, also the Qatar ethylene complex as well. And in 2024, there wasn't a repeat of those big complexes, so that's why it fell last year. Can you post a similar poll for the Saudi real estate sector over the next 2 years? That's a very good point, and I'll bear that in mind for our next presentation. We'll be looking at Saudi Arabia. Which country in the GCC is open to new suppliers and provide them the best opportunity to enter the market? Well, you'd have to say that it's the two largest markets, both the UAE and Saudi Arabia. That's where the demand is the highest. That's where everyone is going to. And so I think it's fairly obvious that those two markets are the ones that currently offer the best opportunity. They also have the biggest need. So that, I think, is hopefully answers that question. For the real estate in Dubai, are we talking about launch projects or successfully sold, implemented projects? We're talking about launch projects and or projects with the main construction contract has been awarded when we're looking at that Dubai slide. Out of the total projects awarded to L&T, what value of projects are in Qatar? That's a good question. Unfortunately, off the top of my head, I can't tell you, but most of L&T's work is in Saudi Arabia and the UAE. I can tell you that, whether it's in railways, metros, or offshore oil and gas and transmission distribution. L&T is a very successful contractor. And if you exclude oil and gas, it is the largest contractor in the civil space in the region. Okay, so question here is, what with the oversupply situation in the construction sector in 2026 and 27, 28 in Dubai, what do you attribute the overall bearish view to? Are you referring to oversupply in real estate? I think when we're looking at UAE and Dubai in particular, you're looking at both ADNOC spending and also real estate in Dubai. Now, real estate prices in Dubai continue to rise. The question mark is, will demand fall for real estate, and will that result in a fall in construction spending in Dubai? And that, I think, is the big question that people are asking. And we'll wait and see how that goes. Next question, what's your reading on Kuwait's still low projects growth? Well, Kuwait has suffered over the last 10, 15 years with a massive underperformance of its market. Mainly that's due to political paralysis and an inability to increase spending. Now, over the last year or so, we've seen a sort of hiatus in the National Assembly, which has meant that the government is now able to rule by decree. And the hope is with the new debt law, which allows the government to take on more debt, that spending will increase. And given the Kuwait's financial situation, there is a lot of potential for the market to grow, particularly in the oil and gas sector, but also the infrastructure. But I think Kuwait to radically increase spending, it needs to open up its real estate to international buyers and create a private sector in the state, which in turn would hopefully result in a increased performance for construction in the state, but has massively underperformed compared to the size of its economy and population. And the hope is that it can only grow. And on that same topic, Looking at Saudi Arabia real estate, at the moment, Saudi Arabia real estate is booming, but only for GCC nationals and Saudi nationals, because they are the only ones who can buy in the kingdom, apart from some premium residents who can also purchase. If Saudi Arabia was to open up its real estate sector to international buyers, then we can see a boom in the market akin to the boom we saw in Dubai in 2001, starting in 2001 and 2002. The demand for real estate in Saudi Arabia is enormous from an international market. And certainly, if Saudi Arabia really wanted to create a boom in construction, then that would be the best course of action to take. And there's been talk about it for a long time. And the expectation is that a new law will be announced to enable this over the next year to 2 years. Given entry of Chinese contractors into the market, are you seeing increases in competitive intensity in bidding? No, we're not. And that's because there is so much work around, there simply isn't enough contractors to bid on projects. And many clients are struggling to attract and pre-qualify enough contractors into their bids and contracts. So it's a seller's market. Clients are doing everything they can to make their projects more attractive to contractors, advance payments, doing away with tender bonds, tender fees, being flexible and retention payments, and reducing the risk onto contractors. The clients also introducing more flexible contractual models like early contractor involvement to get contractors on board earlier and reduce their construction risk. So still a lot more contractors required. Yes, there are a lot more Chinese contractors in the market, but there are also a lot more projects in the market. So overall, it's still a seller's market, and contractors and suppliers can effectively pick and choose who they want to work for. Of course, another reason, a point raised here about the number of Chinese contractors in the market and their success is, of course, a slowdown in the China market. We know that there's been some issues with the Chinese real estate market and construction sector, and a lot of Chinese contractors, as a result, have been expanding overseas. And alongside a political push and alongside the Belt and Road Initiative, the Middle East market is a natural home for Chinese contractors to come in and win work. What is the importance of the growing PPP model in Saudi Arabia and the GCC? Well, an increase in PPP projects allows the governments to deliver their project plans without having to pay for them upfront. So you're not only benefiting the private sector and improving economic diversification policies and goals, but you're also using the private sector finance to help deliver your projects and then operate them. So it's a great way for the governments to be able to keep the market active, to keep growing their infrastructure requirements and supply without having to necessarily pay for these projects upfront. Instead, they're paying them over time, over the course of the concession. And as understanding of the benefits and of the frameworks of PPPs grows, as we're seeing more and more references in sectors outside of power and water, for example, in schooling, in hospitals, healthcare, in airports, then the more confidence in PPP structures grow and the more attractive it becomes. Can you see Saudi Arabia becoming more attractive in the property and construction space as through attractive longer-term residency schemes and through immigration? Absolutely. I think I've just mentioned it. Saudi Arabia can issue a law that allows foreign ownership in real estate in Saudi Arabia. You can imagine what the pent-up demand for that is, and that would substantially transform the economy, helping it diversify and developing the private sector. At the moment, Saudi Arabia has a shortfall of housing, especially affordable housing for Saudi nationals. Once that shortfall has diminished, then Saudi Arabia can push ahead with its real estate investment plans for international buyers. Projects like New Murabba, for example, Roshan, Diriyah, they would all substantially, and Neom would substantially benefit from international investment in that way. And that would create, in my own words, Dubai real estate boom on steroids. I mean, imagine Dubai's population much smaller than Saudi Arabia's, smaller size geographically as well. Imagine if Saudi Arabia were to offer long-term residency permission and criteria for international buyers to come in, then you can see how you can imagine what the demand would be. What's the prognosis or outlook for Qatar? Well, Qatar really hasn't moved on from the spending prior to the World Cup. Since the World Cup, spending has been pretty low. Yes, we've got the LNG program, massive project underway, but in the construction and the infrastructure space, spending has pretty much slowed to a halt. And everyone is waiting for the updated long-term Qatar vision to be released, which will provide a sort of pathway and look forward to what Qatar is planning in terms of its infrastructure and construction. But the simple situation is that Qatar doesn't really need to invest a lot more in its construction and infrastructure space, or its real estate space, and whether it wants to as well is another question mark. So until that is answered, it's very difficult to have a bullish outlook for the Qatar market. Does MEED have any news about Line 2 extension for the Riyadh Metro? When is it going to be awarded? So bids are under evaluation for the extension of the Line 2 Metro it's a short section to Diriyah, and we would expect that to be awarded over the next couple of months. And bidding is also underway for the much larger Line 7, linking the airport going through the North Pole and New Murabba projects onto Diriyah and then onto Qiddiya. That's a much larger project. Bidding is also underway for that, as it is, of course, for the Gold Line in Dubai. MEED announced exclusively a couple of weeks ago that the RTA has issued the tendering process for the Gold Line Metro in Dubai, running from Shindaga through Satwa to Business Bay, and then on through Dubai Land to the Global Village and Arabian Ranches. That's the next big metro project in the region. And of course, the Blue Line in Dubai is underway. And then from the high-speed rail perspective, we have underway bidding. We have the Abu Dhabi to Dubai high-speed line as well. Do you have an estimate of the impact of the 25% tariffs imposed by the USA on imports globally of steel and aluminium, especially from the UAE or Bahrain? Now, I believe the UAE is the 5th or 6th biggest supplier of steel, or it's one of the two, steel and aluminium, into the US. But the US is not the largest market, or even one of the major markets for the UAE and the Middle East, or the Gulf's steel and aluminium producers. And so I suspect that the impact will be fairly limited. I think there are other alternative markets that the GCC can supply. Of course, the GCC has a major cost advantage over other suppliers due to its cheap energy and the ability to produce aluminium and steel at much lower cost. So I think they will be fairly insulated from the tariffs in terms of steel and aluminium, in my opinion. Why has the construction industry been slow to take up technological innovation? The construction industry, or the projects market as a whole, is the worst performing sector globally in terms of technology take-up. Really, that's because of the nature of work. It's manual, of course. In the region, it's done by cheap labor. So there really isn't a lot of incentive for companies to adopt construction technology. Construction technology is also fairly expensive to implement, and in a low price wins environment like the Middle East, actually implementing technology on projects, it can hinder your competitive bid. So with such a low entry point for construction generally, for entering the market, there are so many companies that are prepared to build your project much cheaper using low-cost labor and without using technology that clients tend to not insist on on it, and therefore it's a natural impediment. So unless clients were to insist on technological innovation on their projects, and some of them are, like the Giga projects, like many clients in Dubai, it's always going to be hard for companies to invest in and adopt technology and use them on projects. Will the reprioritization of projects in Saudi Arabia impact spending? Well, yes, we're already seen that last year with the fall in Giga project spending, as I showed earlier in a slide. However, that was offset by increased spending in other sectors, especially power and water and oil and gas and transport infrastructure, but also in construction spending outside of the Giga projects program, for example, by the Royal Commission for Riyadh, by the municipalities, by the private sector real estate players. So yes, it has had an impact on Giga project spending, but it hasn't had an impact on overall spending levels in Saudi Arabia. So I'm running out of time, and I've still got so many questions to answer. I'm not sure if I'm going to be able to answer all of them. Here's a question. Do you believe the Trojana ski village will be ready for the Asian Winter Games in 2029? Well, that's a difficult question to answer. Well, Trojana works are well underway. Of course, we have building the main Trojana lake and dam. We have bidding underway for the vault and for the ski village and various other components of the project. But it's certainly going to be very tight for Trojana to be fully completed in time for the Winter Games. That said, still have 4 years to go. So we'll wait and see. But it is going to be very tight for sure. Right. Is the market already full with contractors, or is there still a need? Well, as I've already stressed several times, there is absolutely a need for more suppliers, more contractors to come into the region. If you talk to the Giga project clients, all of them, they are actively seeking and trying to attract both investors and contractors and suppliers into the market to come and work for them. They were doing roadshows around the world to the projects market community, highlighting their project plans, the pipeline, how to register and procure with them. And so there is still absolutely a major demand for more companies to come in. The existing companies are already at their limits. And so anyone who can come in and bring finance, anyone can come in and can invest, you'll be welcome with open arms. Will the Kuwaiti market pick up in the upcoming years? Well, I hope so, but even now with the centralized decision-making, there still isn't much sign of that happening. So I would continue to be bearish about Kuwait, in my opinion. Can you provide an update on the status of the King Salman International Airport project in Riyadh and the Al Maktoum International Airport in Dubai? So these two projects are the world's two largest airports. Both of them are slated to be completed by 2034 or even 2030 in some in King Salman International Airport's case. At the moment, still very initial stages, a lot of focus on earthworks. King Salman International Airport, the client there has started pre-qualification for its 8 key assets, including the iconic terminal, Terminal 6, the runway, and various other elements. And so we would expect to see the major tenders for the construction to be issued later this year and into next year. There has been a bit of a slowdown on development of Al Maktoum International Airport, so we'll wait to see how that progresses. But Dubai announced last year that it doesn't plan to move all Emirates operations to there by 2034. I suspect that there are a lot of questions to be asked about how that will be financed, given the huge cost for developing what will be the world's largest airport. And I suspect once those questions are answered, we'll be able to proceed more at pace. Does the Saudi expenditure values only apply to projects within Saudi? It doesn't include Saudi-funded projects outside of the kingdom. The former, it only applies to projects within Saudi Arabia. Any update about the Saudi land bridge? This seems to be a question I get every webinar. The answer continues to be no, as it has been over the last 5, 6, 7 years. Hopefully, there might be some movement on that, but I've been saying that for a long time. There's a lot of ongoing discussions between the Chinese government and Saudi Arabia, but there doesn't seem to be much movement on that, at least not what I've heard. Which country is moving ahead with renewable projects other than Saudi? Well, UAE, Dubai. Take a look at the Mohammed bin Rashid solar park, the biggest solar complex in the world. Abu Dhabi too is building the world's largest solar power plants. Dubai is a massive investor in solar renewable energy. Oman as well also has big solar power plans. Of course, both of them pale into comparison with Saudi Arabia, which has a much higher demand base and much higher requirement for spending. But all of them are engaged with renewable energy projects, and all of them on a PPP basis as standard now for renewable energy. What are the other two markets in terms of investing in the mining industry? Well, when it comes to mining, there are only two real markets in the GCC, Saudi Arabia, of course, and Oman. For geological reasons and because of their small size, Kuwait and Bahrain and Qatar don't really have a mining sector. UAE and the Northern Emirates has some limestone quarrying, but also fairly limited, whereas Saudi Arabia and Oman, much larger, have the geology for mining. In the Middle East as a whole, well, you're looking really at Algeria as a major mining hub, potential as well, I think, and lesser extent Egypt. If Saipem is the largest contractor in the GCC, how is it that Chinese contractors are being awarded the highest value of projects? Simply because there are so many of them, right? So because we have 50 plus Chinese contractors now active in the market. In total, when you add up all of the work awarded to them, then you're reaching this $50 billion mark in total. Whereas in terms of Italian contractors, well, you only really have Tecnimont and Saipem as winning large-scale amount of work. So even though they individually might be the biggest, in total, they're not as large as the Chinese contingent. A question here, are there other competitors in the market offering similar services to MEED? Well, you'll have to excuse me for not answering that question. But in terms of the differentials between MEED and the rest, I'd like to think that MEED is the premium and ultimate source of business intelligence around the macroeconomy and projects market in the region. I think we've got a 60-year legacy of that, and I think that says it for itself in terms of our client base, who we work with, the biggest NOCs, the biggest blue chip companies in the region, the governments as well. And I believe we are the authoritative player in this space, whether that's consulting, whether it's data provision, news analysis, or events. We have a unique partnership with companies around the region, unique access. I think that's displayed in our analysis and in events like this webinar today. Right, I'll answer one last question because we've gone now for 75 minutes. Okay, I'll take this question. How do you expect, what do you think about investment in blue ammonia projects in the GCC? So along with this big acceleration in green hydrogen projects that we've seen over the last 3 years, there's also been, by extension, green ammonia projects. A lot of these green hydrogen projects will end up being transforming hydrogen into ammonia, green ammonia. And of course, there are a lot of blue ammonia projects using fossil fuels as in both refineries and power plants as the main feedstock for hydrogen production. And when you've got that blue hydrogen, then by extension, you also potentially have blue ammonia. I personally think that blue ammonia has as good a potential as green hydrogen, green ammonia, if not more, given that you have a massive installed base of fossil fuel based or carbon-based projects in the region. Given the push to net zero, then every country is going to be looking at the carbon capture or using the fossil fuels to also, as a byproduct, develop hydrogen and ammonia. So I would expect that to accelerate as well. And I think there's a very good prognosis for that particular segment of the market. Okay, sorry, I've had more than 75 questions today. I'm not able to answer all of them, but I hope I did answer some of the major ones and answered your queries. You can see here, I've got my mobile number, my email address. If you do have any questions, just want to have a chat, text me or whatever, then please feel free to do so. That's it for now. I wish you all a great rest of the Ramadan and Eid Mubarak for you all at the end of next week. We will be returning with our next webinar in the middle of next month, which will be looking at the MENA power sector, taking into account both thermal power and renewable energies. And then also next month, we'll be having an exclusive webinar alongside Roshan, the Giga project, the Giga project developer Roshan, which of course is developing its multi-billion-dollar housing plan across the kingdom. We're looking at how they are developing their projects, their procurement frameworks, and how companies, contractors, and suppliers can work with them to deliver their very ambitious plans. So that's it from me. Thank you very much for staying to the end and for listening in. I hope you enjoyed it and found it valuable, and I look forward to speaking to you all again very soon. Goodbye.
Welcome to the MEED Saudi Giga Projects 2024.
An extraordinary vision of His Royal Highness King Salman and His Royal Highness the Crown Prince, Mohammed bin Salman. A vision manifested into reality through the astonishing Giga projects in the Kingdom of Saudi Arabia.